Hey guys, welcome back to the pre-market breakdown. I hope you all had a killer weekend and you're ready to get back into the flow. Today is Monday, January 12th, and we're officially kicking off a brand new 90-day cycle. This is where we set the foundation. If you've been struggling with consistency, or if you feel like you're just guessing every time you open up your laptop, listen up. Today, we're talking about setting the tone for your entire trading week. We're going to stop the noise and focus on what actually moves the needle. We're diving deep into the master pattern setup, specifically how to spot that contraction phase turning into an expansion leg for those high probability A plus setups. Let's not waste any time. Let's jump straight into the charts and see what the market is telling us this morning. First things first, we have to take a look at the higher time frame basis. I say this in almost every video, but I'm going to say it again because it's that important. If you do not know which way the big money is leaning, you're just gambling. I always start my morning with the daily or the 4-hour chart. Why? Because the higher time frame is the boss. It's the ocean, and we're just trying to surf the waves. Looking at the charts right now, we see a significant break of a major three rump high here. Okay, that's a huge signal. We didn't just touch it, we broke through it with conviction. Then we held above this three candle pullback here. Okay, nice little push. That right there is an established uptrend in my book. See this white line here? Walking through this area, it's like it's catching its breath. It's grabbing liquidity right below the recent swing low. Okay? Shaking out the weak hands before that next leg up. My higher time frame basis is firmly long, even with all the global economic woes that we've been seeing. I've seen so many traders try to pick the top here and then they just get steamrolled. It's like trying to swim upstream against a massive current. You're just going to wear yourself out and lose capital. Stay patient and wait for the market to confirm what the higher time frame is already telling us. Now that we have our bias, let's drop down to lower time frame structure to find our entry. We're going to be zooming down either into the 1 hour or the 15-minute, depending on what you're really looking for as a whole. This is where the magic happens, and here's something really, really cool. You can see here our lower swing, our shoulder, head, shoulder pattern coming back through to this high. Now you'll notice that this high here in the Friday session, they did not give us a total break of this area. And that's fine. That's perfectly fine. Sunday, with the tensions that we had, they brought it right back down. But they didn't bring it down into a critical area. They brought it down into an area of consolidation, an area of consideration. What we want to do when we see this is we want to come over to our tools and we want to start marking out very quickly. You don't have to be super precise, be very quickly. Mark out your high here. You're going to want to mark out your recent low as well. Now, in marking out that high and that low, it allows us to understand what our macro movement trend is. So we know that we're in that higher movement in the higher time frame, but right now it needs to gather that energy from the big guys so that it can continue that movement. Well, that's exactly what it's doing right now. See, if you look right in here, you're going to notice there's a lot of price action sitting where? The 50% area. Okay. So you're going to want to mark out that central node, as I like to call it. Now, sometimes these are exactly 50% of the high and low, peak and trough of the market movement, but not always. This is the energy buildup, and it allows you to be able to have specified points for you to be able to work with within your trading schedule. Now that you know where the 15-minute area is, you can make a simple deduction. And this is what we want to do. Yes, longer term trading does have more components and can be kind of complicated. But as a newer trader and as a struggling trader, you need to focus on the simple thought first and get your wins with that. What is our simple thought when it comes to this? Our simple thought is simple. With a 50% area here and a recent swing low here, what we want to know is that if and only if we pierce this 50% area here and we break lower, whatever our high area is, that's our stop. Okay? With that area being our stop, we're then looking to target whatever the strategic point was down in here. Well, how do you find that area? Just look to the left. Okay? Right here in this trend, you see how in this uptrend, we made our way up and then we paused just slightly right in here. Well, that's a channel within a channel. This is a great area to utilize as a target metric. All right. You can easily come here, go to the low side of that area, swing low here, swing low here. This is now your target. Okay. Now, to be quite frank, yes, it is good to have static risk reward metrics such as a 1 to 3, 1 to 5, because when you run the math out, you only have to be right 2, 3 times out of 10 to be profitable. But the reality of the world is very seldomly are you ever going to find a true 1 to 3, 1 to 5, and it actually match with the market movement because the market's a dynamic organism. So you have to have proper balance around that. Let's say that this is our target right in here and that this is our stop. What does that end up being for us? Well, the good part about our partners here at TradingView is you're able to figure that out. So if we were to have a stop roughly right in here, we can see that this here is almost a 1-for-1. So depending on where you set your entry criteria and your stop criteria, you're going to be well within spec. So if you ran it as low as this little point here that started that consolidation and run, you can see you're at that 1 to 2.7. Now a full 1 to 2 is going to be somewhere down in here. And in my opinion, for what we're seeing in the market, even though I do believe that today itself is going to be a consolidation and a down day within this uptrend, so a little bit of a contrarian move, I'm not really looking for us to get all the way down into these lows, but it is an area to keep in mind. So that's just a little way for you to understand the risk reward metrics on top of this. Now, with that being the case, we now know what we're looking for when it comes to targeting a 1 to 1.4, 1 to 2 ratio, and we want to keep it mechanical, keep it simple. If the setup isn't there, we don't trade. That's it. It's that easy. Let's talk about the specific pre-market levels and the scenarios I'm watching for today that I alluded to just a moment ago. You can see that we've got these major levels right in here for our pre-market session. We had the high for Friday, the sell-off right in here, this high, and they made a grab past that low. They grabbed this liquidity here, but if they cannot get above this little high right here, we're all bearish, looking for a bearish move. If for some magical reason they are able to break this area then you're going to want to target this open zone here, and you're going to want to target this little runoff here. These are two strategic areas where price action made a choice to continue lower, and then it was a very rapid decision that has not been resolved yet. Once that area gets resolved, then we're looking at some more market dynamics. So for price action, if we get some bullish notions, they're going to come try to resolve this area here with high notes here. Contrarian, if they do not break these upper areas with conviction, i.e. by about 10 o'clock, between 9:45 and 10 o'clock, then we're looking for continued movement down, consolidation at this 50% area. That was that low that we had from Thursday. They're going to look for some consolidation there. Once we break that area, that's when we're looking for that continued movement lower. Again, we really want to keep a close eye around that 10 o'clock area. Alrighty, with that being said, please remember that you do not want to jump the gun. You want to wait for your consolidation. You want to wait for your confirmation. We're not reacting, we're responding. So, our key takeaways on this are your risk management moving forward into the trade, what you're looking for specific entry and exit criteria, and even more so, the risk metrics around your particular account. Be it a live money account, be it a prop account, that's fine. Just make sure you're taking the proper risk management and doing the proper sizing. Always align your lower time frame entries with your higher time frame bias. And please, no revenge trades. It's the beginning of the year. You don't want to start like that. If the market stops you out, great. It's just data. It's not personal. That master plan, that master idea is the ethos about everything we'll be talking about moving forward. And we're going to have a lot of fun in the next couple of videos. Master the ability to sit on your hands during contraction, and you'll master the market. Wrap up and understand that getting tied into the market emotions, especially when you're watching some other news feeds out there, you need to keep that stowed. There is no room for emotions in the market. Well, guys, that's your pre-market edge for the Monday. And let's start this 90-day cycle strong. Trade smart, stay disciplined. If you've got any questions about the market levels, any struggles you've been having, please drop them in the comments below. Find me over there on Traderverse. Feel free, ask questions. I'll do the best of my ability to help you out with that. We're going to be having some get-togethers on the weekend for market dynamics, starting to understand market flow, and Sunday market reports. We're not just going to be focusing on NQ and futures, we're going to be focusing across the entire broad market and utilizing the tools from Traderverse to do that. All right, there are links in the descriptions to all the software that we're using, and even more so, to Traderverse itself. As always, remember, your trades are in the history. I'll see you around. Stay green.